Okay, so in the second half, what we're going to have a look at is the Ethereum blockchain, like the fundamentals, the idea, the vision of Ethereum, and then Luca will give an introduction on exchanges. We have like fiat crypto and crypto exchanges, what we have to take into consideration when we're trading cryptocurrencies. And then we're getting our hands on and doing some transactions. Okay, so let's talk about Ethereum. So, whoa, this is perfect. Okay, so we already had a look at Bitcoin, and the vision behind it was this peer-to-peer cash system. So Bitcoin can be seen as blockchain 1.0. It's decentralized money, or as I already mentioned, at the moment it's not really money, as we have like a very, very low transaction throughput at the moment and a very high volatility, which doesn't make it suitable for everyday transactions. And also like because of the very low transaction throughput, as soon as we have more transactions in the network, it kind of gets congested quite quickly, and then the transaction fees are rising. So this is also a problem. What I want to emphasize is that Bitcoin is actually not equal to blockchain. The Bitcoin blockchain is one blockchain. There are different blockchains. And yeah, it was invented as peer-to-peer digital cash. And what people realize then is that the underlying technology of Bitcoin, the blockchain, can do much more than only transferring cash without an intermediary. And I say only because it's already like quite a big thing, like I explained earlier. So yeah, who knows this guy? Who has seen him before? Okay, it's like a genius of our time, I'd say. It's Vitalik Buterin. He's famous for having invented Ethereum and also for his style of wearing unicorn shirts. He came in contact with Bitcoin, I think 2011 it was, and just a year later he published the Ethereum white paper. Because he was like, oh, but with Bitcoin we can only transfer digital cash, so I'm 19 years old. Well, it's easily said. And he was like, yeah, why not implement a blockchain where we can have decentralized applications on top? Yeah, not just a cash system, but whole applications. So he wanted, for example, let's take the example of Airbnb or of Uber. Yeah, it's kind of decentralized services, but in the sense of how the users interact with the customers, but with the drivers. But the service itself is centralized. There is Uber, there is Airbnb, and he wants to put all the applications we have at the moment, he wants to decentralize them. And his vision, therefore, is the total decentralization of the internet. And what the special thing on Ethereum is that it's actually possible for every participant in the network to build these applications on there and to implement smart contracts. Smart contracts, there maybe it's not the best description to call them smart, because actually they do exactly what they're programmed to do. Yeah, smart would mean that they're actually kind of changing the code or whatever. Yeah, so nowadays we say they're not smart and not really contracts, as they're not legally binding at the moment. But smart contracts, they're just it's self-executing code. And what we can do with a self-executing code, that we can also get like data from the outside, from the real world, into these smart contracts, and they're fulfilling them. Okay, how does Ethereum work? So we have this, very often it's confused, these two terms, Ethereum and Ether. Ethereum is the decentralized platform where we can implement applications, decentralized applications on. And Ether is the cryptocurrency or the crypto asset on the platform. And it can be seen as the crypto fuel, because you actually need Ether to pay for whatever you do on that platform. If you implement code on the platform, you have to pay for that code in Ether, yeah? Or if you're doing a transaction. So, and as you can see, it's the same as in Bitcoin. Ether can be subdivided into like very, very small parts. And like, for example, a GTEC, which we're talking about again later, is like 1/billionth of an Ether. So 1 Ether at the moment, I think it's around $450, $500, something like that. I haven't had a look. And a GTEC is 1/billionth of it. So, but besides the Ether, there is something, there's gas, yeah? So what Vitalik Buterin wanted to achieve, because of the volatility, yeah?
It's not possible at all to do it with dollars or euros. You have to have all transactions with Ether.
Exactly. As soon as you transact on the platform, you have to have Ether to use it. So first you go to an exchange, fiat to crypto, you can buy Ether, and then through, but I think in the future it will be super easy. You can easily buy like crypto with fiat, and then you have, like we'll see later with this MetaMask extension, you won't even realize that you're using crypto actually. You're just in your browser and you're paying for something and you can pay in crypto. And I think in 3-4 years time, you won't actually realize too much that it's cryptocurrencies. So what he implemented besides the cryptocurrency Ether is the so-called gas, because Vitalik Buterin wanted to have a constant cost for code. Yeah, so let's say we have a code which includes a couple of Ausführungen, executions. So the code is made of like a couple of additions, a couple of multiplications or whatever. And Vitalik Buterin, he put a paper where he exactly says like an addition is like 3 gas, a multiplication is 5 gas. Yeah. So what he achieves with that is, like I said, a constant cost for code. If you have a code which includes like 5 multiplications, it's always 15 gas. The price for the gas itself, this changes, yeah, but the cost for the code is constant. And the cool thing is, because everyone can write on the blockchain, everyone can implement decentralized applications. How do we make sure that it doesn't get super messy? If we pay for the code, there is an incentive to write clever code and to have it as like efficient as possible, yeah, as short as possible, but with everything included. And then what you have is the transaction fees, which is a combination of the gas cost itself. Like, for example, I have the code, it costs me 15 gas, and then I have to look at the gas price, which is comparable to, which is paid in Ether, and this one changes, which makes up the transaction fee. And the cool thing is that you can actually have a look. There is a, yeah?
That's what really strikes
Sure.
me.
Absolutely. I mean, it would be perfect if the cost for the token itself would be constant. Yeah, and not like, so if you pay for the code, yeah, if you pay for the gas and the price of the Ether is, once it's like 1 GWI and once it's like 6 GWI, it's like six times the money you pay for the code. We will see how this will turn out in the future, but we also have to take into account that these networks are super, super much in their infant state. And if we imagine, let's say everything works out and we can do like Vitalik Buterin just said, they can have like million of transactions per second in like 2-3 years time, because they're also implementing like second layer solutions. If this works and we really put all kinds of applications on the platform, and like pretty much everyone is owning, or like many people are owning Ether, then the market capitalization is that high that if someone sells like a billion or whatever, it wouldn't change that much. At the moment, the market capitalization is so low, and we have big whales in the whole network who are manipulating like crazily the price. So sometimes they're selling like a big amount, and everything crashes. Yeah. So if we imagine this gets bigger, then the whole thing gets more like less volatile, let's say. But
Should get no volatility at all. I mean, if you have a utility token where you just pay for a transaction and nothing else, it shouldn't be a currency. It should, it's a currency which should be flat.
sure, but as soon as you make it tradable on platforms, yeah. I mean, if it's people just trade it, even though it should only have a utility. Yeah, it's not.
Floats too. So euro.
Yeah, but the basic idea is a different one over here. For my
Yeah, the basic idea is utility, sure. But because you have to buy it, people start speculating with it, even though this was not the main idea of Vitalik Buterin. Absolutely. So, and yeah, we have to see how that plays out. So the cool thing is, what you can do on this gas station, for example, you can manipulate the speed of how quick your transaction goes through the network by setting the gas price. Yeah, I can say, okay, I pay like, for example, here you can see the gas price. It's in Gwai. Gwai, like I said, is 1/1000th of an ether. So if I pay less than a Gwai for each gas I have to use, then it takes on average 4 minutes that my transaction is confirmed. If I pay a Gwai, it's already down to 0.7, 0.8 minutes, and the more I pay, yeah, you see it doesn't make a big difference. So at the moment, obviously, the network is not too congested, so that the miners actually, it doesn't take long to validate all the transactions. When the network is kind of congested, you really see a difference that when you pay double the price, it goes through super quickly. If you pay a low price, it takes ages to be confirmed. So you can actually check how you should set the gas price for your transaction to go through quickly. I want to emphasize again, there is a bit difference in Ether between the gas and the transaction fee. So for example, let's say that the transaction fee is low. Why is it mined in a later block then, if the transaction fee is low?
Low motivation.
Exactly. The miners, they're like, okay, this is a low, because they get the reward for the block plus the transaction fee, so I include the transactions in my block which have a super high transaction fee. Yeah. Or same is if we have a high transaction fee, it gets validated quickly. If the gas cost is low, this only means that the code I set has a very low computational cost. Yeah. So that's cleverly written. Okay, that was it on Ether. Let me stay in the present, sorry. Perfect. So cryptocurrency exchanges, how do we get Ether at all?
Maybe this is a bit more general, not an exact, so to say, instruction on how you guys actually get into cryptocurrencies. But I mean, most of you guys have already done it. So just a couple of kind of important considerations. As I already said, it's a bit funny that in order to access a decentralized currency or system, you actually go through intermediaries. But that's the way it is at the moment. So cryptocurrency exchanges are by definition intermediaries that do not only provide you with the means to obtain a cryptocurrency or open up a wallet, but they also are supposed to be regulated entities. Now, I put typically here. They're typically regulated because depending on the jurisdiction where the domicile of the exchange is, that may vary kind of substantially also. In general, cryptocurrency exchanges, they allow trading in cryptocurrencies, so very much like an ordinary exchange we know, for instance, like a stock exchange. Okay, they act as market makers, they connect buyers and sellers, and what I find kind of interesting is they even allow margin trading and people to provide margin funding. So just to give you an idea, I mean, we all know cryptocurrency prices are very volatile, but there are even a couple of people out there who think the volatility is not enough. So they take on a margin and they basically trade in these markets with leverage. Okay, so I mean, as I said, it's a question of flavor. These people exist, and what is then actually also quite interesting. Some exchanges, they also provide the cryptocurrency participants or the members of the exchange to actually grant these loans to people, so you can actually earn some interest if you want on your cryptocurrency funds if you post that as a loan to the other crazy people who trade with leverage. And yes, sorry. The interest rate, it fluctuates quite substantially. It's quoted in percentage per day. So sometimes it's around, I mean, I looked at it on a per annum basis. For Bitcoin, it's between 20 and 30%. It's quite high annually. Yes. But it fluctuates a lot during the day, so I can't tell you the exact number. It's a bit lower for Ether though. Why exactly? I'm not sure. Okay, so even in those markets, there are specific dynamics that necessarily don't necessarily make sense or are due to some very specific issues. Okay. And some exchanges, they actually also offer OTC trading, so over-the-counter trading. Basically, if large transactions go through, you do it a bit like in an investment bank in the old days. You'd phone up someone and then do a transaction. You do not go directly through an exchange, but do it in a peer-to-peer way if you want. And the cryptocurrency exchange is actually the broker, sort of. And then the whole thing is settled, through or via a bank transfer. So even these activities are essentially facilitated by the exchanges. Okay. So yes. That's a tough one.
It is already possible. There are decentralized exchanges. Yeah.
So that's basically exactly the perfect slide. Yes, so there are cryptocurrencies are not only fiat gateways. Okay, so a couple of them, like the most popular one, Coinbase, or a German one, Kraken. Okay, they offer the entry point, but there are also sort of on a second layer the decentralized exchanges. Okay, so you have to distinguish in exchanges fiat to crypto, crypto to crypto. And then also from sort of a counterparty point of view, a centralized exchange versus a decentralized exchange. Okay, and the centralized exchanges act very much like an exchange we know in a stock market. The decentralized exchange basically then really facilitates peer-to-peer transactions. Okay, and so you have a couple of examples there. And to answer your question, so yes, it's going to be possible. All right. And then obviously a word of caution. So those cryptocurrency exchanges, as I mentioned, they are regulated entities. Depending on the jurisdiction, the regulation varies. What is very important, also they have, so far, they have an economic sense, so they act or they perform or KYC and AML regulations for investors who typically come in, or for retail investors at the moment who come into the cryptocurrency space and look to invest. At the same point, it needs to be mentioned that all the centralized exchanges that you may be using, they basically manage your private keys. So you are not actually the owner of the funds, okay? You just sort of hold an account with the exchange. The problem is these exchanges or any forms of intermediaries in the crypto space, they have a very impressive track record of being hacked. It's really striking how regularly this happens. The problem is then, first of all, your sort of identity information, okay, from KYC, from a KYC point of view, you need to identify yourself before you actually engage in transactions. So your information, personal data may be at risk, but then also most important of all, your funds. Okay, your funds are significantly at risk because since your cryptocurrency exchange manages your private keys, then the hacker who sort of then gets access to all the funds with the exchange, he transfers the money, it's gone, okay? And there's no hotline like 0800 Bitcoin or something that you might call, okay? So the funds are gone. So that is essentially, that is the main point. So that's why it's really a necessary word of caution in our view. And the most, or one of the most famous examples was Mt. Gox. Also maybe as a highlight to see which kind of entities all of a sudden morph into a cryptocurrency exchange. Does anybody know what Mt. Gox stands for? Okay, it stands for Magic the Gathering Online Exchange. So I don't know about you guys, but in my childhood, Pokemon cards were very big. The same as Magic the Gathering cards. Okay, so it's like a card game, and these cards were traded. And this thing started actually out as an online exchange for these playing cards. So you can imagine the security standards were not necessarily very adequate to all of a sudden, if the founder, he all of a sudden found that enabling Bitcoin and cryptocurrency trading was very profitable, but never thought about security. So it's sometimes it can be a bit difficult. Okay, so before you actually choose an exchange or a sort of service provider, you need to do a significant amount of due diligence, or you need to be sure that you can actually trust the intermediary. Okay. So this would be the theoretical part, the fundamental part. We will now move to the long-awaited hands-on part. Did you all download the MetaMask extension to your browser? Okay, then Veronika will talk you through what's next.